Yeah, I think a lot of the move now we've seen in the Aussie is probably going to come to an end. You look at the backdrop, the dollar itself has had a strong run, and we're sceptical about how much further that's got to go in terms of the Aussie.
Why is that? When rates are supposed to be going up before the end of the year,
Yeah.
1 December. Why is that when you've got people talking about the Trump reflation trade, tax reform, et cetera, being on the table? Why shouldn't the dollar be stronger?
Look at the Fed pricing now. It's already shifted for December. It's up to around 70–75%.
Thursday, it's almost priced in.
That's almost priced in.
Okay.
There's skepticism. We are quite skeptical about the extent of the tax cuts and how long they will take to actually get through. So I think there's too much optimism on that front now being priced in.
Into the dollar?
Into the dollar. And then obviously on the other side of the story, we're still looking for obviously ECB to announce tapering. The European economy is still doing very well. Other central banks are looking to normalise as well. We've got a Bank of England rate hike.
So differentials will narrow is what you're saying?
Yeah, I think from that perspective. And to be honest, the dollar has been in a downtrend since March. So it's inevitable that we do get a bit of a pullback. And we do think that that's what we're seeing right now. But in the broader scheme of things, we're still quite comfortable in the view that we're in a multi-year downtrend in the dollar.
You talked about the fact that you're fairly sceptical on timing when it comes to tax reform in the States. But if tax reform is in fact done, and some of this, what was the number, 3 trillion, something like that, is repatriated back into the States, surely that's going to have an influence and impact on the dollar.
At Nomura, we've done the analysis. We've looked at a lot of the company balance sheets, and we think there's around $1 trillion that's potentially could be repatriated. But when you break it down into what's already in US dollars and what's not, it comes down to around 240 billion.
That's still a lot of money, though.
It's still a lot of money, but the key there will be what's the time frame for that to be repatriated. If it's an open window or over a year in terms of flow in the FX market, it's very small.
Marginal impact.
So we're not expecting that to generate too much of a move in the dollar.